am a scalper. I absolutely love trading options because it keeps the risk. Did you know that there's different types of option traders? Well, in this video, I'm going to break down 5 different types of option traders, and you can determine which one you would like to be. Before that, let me introduce myself. If you don't know me, my name is Tanisha T, and my goal on this channel is to help you make anywhere from $100 to $1,000 a day doing options trading. So the first type of trader you can be is an intraday trader or a day trader. I've heard those terms like interchangeably, but what they really mean, guys, is that you take multiple trades during the trading business day, which is from 9:30 a.m. Eastern to 4 p.m. Eastern time, okay? So if you take multiple trades during that business day, you close out all your trades by the end of business on that particular day, you are a intraday or day trader. Intraday means simply within that day, okay? So you can be a intraday or day trader. All right. So the next type of trader you can be is a scalper. I am a scalper the first 30 minutes of the market opening. Scalping is simply taking a trade and closing it out within seconds or minutes of taking that trade. So you can be a combination, which I am. I'm a combination of a scalper and an intraday trader and sometimes swing. Okay. So can you be multiple? As I just said, yes, you can be multiple types of trader. It just depends on what you're comfortable with and what you like. Scalping is usually a great strategy or a great tool that you can use when it comes to trading to make a quick grab of cash. I like to also use scalping in the beginning of the market because we like to make sure that our first trade is a new trade. So even if you're just scalping and it's a few $100, that is a morale booster, right? An emotional booster to say, hey, great, we got a green on the day so far. Let's look for an A+ trade to make more money in the market. Third type of trader you could be is a swing trader. Swing trading comes into play when you do not close out your trade at the end of business at the closing bell. You hold that trade or you keep that trade. You do not close out your positions. So for example, you believe Tesla is going to go from $100 down to $50. You've heard some news, you've done your research, you've done your back testing, and you feel really good about it going down to $50, right? So you purchase your contracts inputs and you do your expiration date towards the end of that week or the next week, right? Because that gives you time for the stock to actually get to that point of $50. The beauty of swing trading is that you do not have to nurse the charts. You do not have to watch it. You can go to work or you can go on vacation, but obviously you want to be able to manage it to see when the stock is going to get to that $50 so that you actually sell. So swing traders benefit individuals that are not home every day. They might work a 9 to 5. They do not want to be on the charts for hours at a time or however many times, like literally tied to a screen is what I'm saying when it comes to swing trading. Swing trading is a benefit for certain individuals that want to trade in that strategy or in that way. I personally only do swing trading when I'm out of town or going to be on a long road trip or something like that where internet might go in and out, right? Because day trading, you have to be able to enter and exit a trade within a couple of minutes, couple of seconds, right? So swing trading gives you that flexibility of being able to enter a trade and hold the trade for a longer amount of time and still be able to make a return on your investment. Let's go on to the fourth type of trader you can be. The fourth type of trader you could be is a long-term trader, right? Where you're able to hold a stock a bit longer than you would for a swing. So for example, you are still buying options, but you buy your contracts expiration dates months out. So if you still believe Tesla is going to get to that 50, but you think you need a little bit more time, you would buy it out a bit longer. So then you would be a long trader, right? So you would be holding that stock for a bit longer. It's literally simply you're pushing out the expiration date for a few months out. Just be mindful that the premiums will cost more the further out you go because the brokerages understand that you're giving yourself a better chance for the stock to get to that point and you have to pay for that flexibility. Last but not least is a holdings. Having a holdings is that you're actually acquiring the stock, and this is a traditional form of acquiring shares of a particular stock, okay? So you would buy Apple stock and you would buy Tesla stock, okay? And usually when it comes to holdings, you are hoping for the stock to go up. right? You're hoping for the stock to go up, or you want your values of your shares to go up, okay? So those are the different types that you can be when it comes to trading. And I absolutely love trading options because it keeps the risk lower and the return can be higher. That's why I like trading options. So y'all, let me give you an example of what the different types of traders in using a car as our example, right? So if you are a day trader or intraday trader, you would be essentially renting the car for the day and returning it by 4 p.m. The store closes at 4 p.m., so you gotta bring the car back. Same thing when it comes to the stock. You're purchasing the stock, but you will close out all your positions by 4 p.m. when the market closes. So now let's think about a swing trader, right? So you're going away for a week trip and you rent the car or you rent the stock for a week, and you have a time you have to bring it back, and it's usually end of that week. You have to bring the car back, or you have to sell off all your positions in that stock if you're doing swing, so that you can actually make some money off of that particular stock. Now let's think about long. You may really like this particular car and you want to lease it, right? You want to lease it for a longer period of time. That's just like with stock. You're going to be leasing that particular stock, or you're going to be purchasing that stock for a longer period of time, 3 months, 6 months, whatever the case is. You are holding that stock for that amount of time, or you're leasing it for a longer period of time, but you do still have an expiration date that you have to return it by, or you have to sell off all your positions. If you just love this car and you want to buy it, now you hold it. That car is yours, that stock is yours. You own shares of that stock. Okay, guys? So I hope that the analogy of cars gave you an example of the different types of traders you can be, you know, what it means, and when it comes to expiration dates, when it comes to acquiring the particular stock and options. But the simple way, guys, for you to keep it in your mind is that when we trade options, we are just renting the rights to buy or sell the stock. That's all. It's a rental. And we do not have the responsibility or the risk of holding that particular stock. So we're just renting it for a certain amount of time. Okay, guys? So I hope this was a helpful video. If you have any more questions about options trading and want to learn more, make sure you comment down below. Make sure you check the description box to find my Discord link where I have more information about trading, and I do live call outs for the premium channel. I look forward to seeing you on the next time. All right, guys, see you soon.